Good afternoon, everybody, and I now call to order the Audit Committee meeting for the Board of Directors for MES for October 19, 2023. Since this meeting is being held hybrid, I will call on Ms. Fuller to conduct a roll call of all board members present. Ms. Fuller, please call a roll call of the board members present.
Okay, Ms. Jose?
Present.
Mr. Botts?
Present.
Mr. Davis?
Present.
Ms. Keller is not with us, and I also have Mr. Johnson.
Present.
That is all board members present.
Thank you, Ms. Fuller. The first item on the agenda is approval of minutes for the May 18, 2023 Audit Committee meeting. All board members have been given copies of the minutes of the Audit Committee meeting for May 18th. Are there any corrections, changes, or discussions of the meeting minutes? Hearing none, the meeting minutes stands approved.
I'm going to stop the share on my screen.
Our next item on the agenda is the RSM presentation of the FY23 audit results. And for that, I'm going to call Ms. Valerie Coleman and Mr. Philip King to present.
Perfect. Thank you again. And we do have a presentation, so we'll get that started. And good afternoon, everyone. My name is Valerie Coleman. I am the partner in the engagement and happy to present to you the FY 2023 audit results to the audit committee. So we're going to go again to the executive summary. Wanted to give you an overview of what transpired for FY 2023. So the June 30th, 2023 audit is nearing completion. After completing our remaining procedures, we expect to issue an unqualified opinion on the financial statements. Essentially, that means it's a clean opinion. Key open items include some subsequent event procedures, some final technical reviews on our end, and obtaining the assigned management letter that we do at the end of every audit. Significant changes to the plan audit strategy. So if you remember, we last connected in May, and we presented to you what we plan to do as it relates to the audit for the FY 2023 cycle. And pretty much what we presented is what we did. So there were no communications or anything that needed to be made to say that we deviated from our audit strategy. Significant risks. So the significant risks that we pointed out during that meeting, there were no changes to those risks as well. And we do have something that's new this year as it relates to the adoption of a new GASB standard. This is GASB Statement 96, which is subscription-based information technology arrangements. So essentially, we'll go into that a little bit deeper in our presentation as it relates to how that affected the organization as a whole. Audit adjustments or uncorrected misstatements. During our audit, we did not identify any. So that essentially means the trial balance that was presented to us when we came in to perform our audit is essentially what is presented in the financials at the end. Deficiencies in internal control. We did not identify any material weaknesses or significant deficiencies that would require communication to this body of governance. And again, everything really worked out nicely for this cycle. Next slide. A few areas that are the required communications per the professional standards to help you, those charged with governance, to do your duties. So again, as we indicated, we issued that separate communication and we presented to you early on as it relates to what we were planning to do for the audit and their scope and timing, and there were no changes to that. Preferability of accounting policies and practices. So essentially, under the accounting guidance, if the management may select alternative accounting practices in certain circumstances, if there's two ways to account for a certain arena, we'd be required to let you know what those choices are and let you know how management concluded. Nothing like that came to our attention to bring to the committee's attention as well. Adoption or change in accounting policies. There is one, as we indicated at the beginning. Essentially, the subscription-based information technology arrangements, GASB, is one that is very similar to the leasing standard that we had conversations about in prior year. So what happens is we have to now look at it for any of the information technology contracts. What that means is we ended up booking a right of use asset, right to use these technology subscriptions with a corresponding liability of about $4 million. This does have an effect in terms of a restatement as it relates to the beginning net position of the organization that is noted in the financials. So it doesn't reflect anything in terms of an error made by management. This is just how you adopt the standards. You do have to show the adoption of the standard in the closest year being presented. In this case, since you guys are comparative, it makes a change for the July 1st, 2021 presentation. So this is just the way that the standard is adopted, but again, it doesn't reflect an error in the organization at all. Significant accounting policies, we did not identify any significant accounting policies that were controversial or emerging that we'd need to bring to the committee's attention. Significant unusual transactions, everything was normal for the organization in terms of what their mission is and what they're slated to do as it relates to their business. The main thing, again, that we had conversations about was really just the adoption of this particular standard, which I alluded to a little earlier. Next slide. So now we're gonna pass it on to Philip so he can discuss some of the accounting estimates that we noted.
Hi, good afternoon. I'm going to go through the significant accounting estimates that we have deemed to be most significant to the financial statements and just briefly explain what they are and how we approach them and got comfortable with them. And we do want to point these out just because these are the areas that require judgment on the part of the management. And obviously, we apply a little more scrutiny than we do to just a traditional transaction. The first area is going to be the accounting for the allowance for doubtful accounts. There's approximately $34 million of receivables. There is only an allowance of about $250,000. That's very small compared to the overall balance. We still consider that to be a significant area just because of the size of the receivable balance. And so we got comfortable with what was recorded as the allowance. And just to point out that most of that balance is, or a big part of it is our receivables on projects with the state. And so there's a very high likelihood that the MES will receive collection on those payments. The next area we point out is the useful lives used to depreciate capital assets. We have not historically found any errors or had any difficulties. But we do review this every year. We perform recalculations. We select assets and evaluate the lives that were applied to the assets to make sure that they're appropriate and in accordance with the established policies that MES has. And there were no changes to those policies. So we also look at specifically with investments and we test how those are valued. Obviously MES relies on banks to provide values. They perform, MES management perform their own evaluation. And so we come along and test to make sure that these are being valued appropriately. Because when we say fair value, we're looking at transactional data in the marketplace. And so a lot of these investments on the MES side are US treasuries. So we can look and see how those are trading within the fiduciary fund, the OPEB fund. There are mutual funds, and again, those have observable prices in the marketplace that we can look at and see what they're trading at. That's the primary way that we test those. There's a significant estimate identified around how the landfill closure and the costs that are required to maintain those get recorded in a liability within the liabilities. And so we test that through a multi-pronged approach, looking at third-party engineer reports and looking at the underlying transactions to see that those are the costs that were used to create the liability was appropriate. The next two really revolve around the pension, this page and the following page, around the pension and then the other post-employment benefits liabilities. Two different liabilities, but they are very similar in behavior. There are quite a few estimates that go into these. And so we, due to the fact that pensions can get a little bit tricky, we do involve a specialist to help us evaluate it. So a pension specialist who looks at the different rates, the assumptions that go into the calculation, the future costs and discount rates being some of the most important items that we look at there.
Yeah.
And I just mentioned that I moved on to the OPEB liability. This is very similar to the pension. So I try to cover those at the same time. Within the OPEB, there are investments, but I mentioned that earlier. So when we get into the liability, we really are looking at both the liability side and how the liability is calculated, but then how it gets reduced by future performance on the investments. And so we look at historical performance and how that gets applied to future performance and to reduce that liability. And then, so we also are going to look within the leases. We look at the leases from how the liability is discounted down. So the liabilities are initially set up for the lease liabilities, and then for the subscription-based liabilities that were new this year, looking at the contracts for future payments of how many payments are going to be paid into the future. That total payment liability then gets reduced down and to a present value, and that present value is what gets put on and recorded in the financial statements as a liability. So when we look at these liabilities, we're looking specifically at the what we call the incremental borrowing rate that reduces the liability. And so we want to make sure that there's an appropriate rate gets selected for that discounting.
Yep.
Okay, and so with that, I'm going to leave the estimates. At the end of our audit, we'll be issuing our audit opinion. And so as of right now, we anticipate these paragraphs to be attached to our opinion. So this first paragraph just explains to the reader that MES adopted the GASB 96. Does not change our opinion, but as Valerie mentioned earlier, there will be some kind of adjustment to the opening net position. And that is not considered to be a restatement of error. It's just a restatement due to the adoption. And so we have paragraphs just alerting the reader to the fact that we have evaluated the supplemental information that gets attached and included into the same financial report as the financial statements. So we talk about that we have reviewed it, but we don't express an opinion on those statements. This is a normal paragraph that we have every year, but you want to make sure you're aware that that's in there. And lastly, we also include a paragraph in our opinion referencing the reader to our separate report on government auditing standards, which will be issued in connection with the single audit compliance reporting. So we will have these paragraphs, but just from a very broader perspective, we issue these opinions in prior years, and so these are not any negative reflection. These are just very customary paragraphs in nature. Okay, so we do have a slide just basically restating the fact that we had no adjustments to the trial balances that were provided to us. We are substantially through the testing. We don't anticipate any adjustments. And we sort of break that up into adjustments that were recorded and adjustments that are smaller but don't get recorded. And we don't have any at this point in either of those categories.
Perfect. And I'll continue with some of the required communication here. And again, as Philip noted, the government auditing standards, our report is in accordance to the yellow book. So that was that last paragraph he had indicated for you guys. And again, if there's any sort of findings or anything of that nature, we'd be required to let you know. And so far, no findings to report. And we are completing an audit of the federal programs. So we had one federal program that is being audited. It's called the Hazard Mitigation Grant Program. And there are no compliance findings related to that were noted for fiscal 2023. And then the last few required observations, significant issues discussed with management really relied with the GASB 96, ensuring that we understand what those subscription-based technology arrangements are and that they were accounted accordingly. We did not have any disagreements with management. There wasn't any sort of significant difficulties in performing the audit. And we are not aware of any sort of consultations with other accountants. So essentially, if we propose a conclusion to management and they were not content with that conclusion and they went off and got a second opinion, we'd be required to let you know that transpired, and we are not aware of anything of that nature. And lastly, we did not have any sort of difficult or contentious matters that required consultation. Essentially, if we came across an accounting transaction or a sort of stance as it relates to a particular accounting treatment, and we had to run it up the chain and get a consultation with our national office, we'd be required to let you know that transpired, and that did not in the fiscal year. This slide here is just to remind everyone what it means to remain independent. So we do follow both the AICPA and the GAO, which is the Government Accountability Office independence rules. So this outlines our responsibilities as well as the service's responsibility to ensure that we do remain independent. So if there's any sort of new officers or changes in the organizational structure, we'd be required to be known about it so that we can ensure that our firm has that arm length a distance relating to the organization. So this is something that we take very seriously, and we just wanted to bring that to your attention, that everybody remain independent within the organization as it relates to those working on the engagement and any affiliates or structure or anything of that nature within the service. We remained independent. And really lastly, in your reporting package, what we've done is we've provided a draft of what is called the representation letter. So at the end of the audit, essentially the very last day of the audit, it's going to match the audit opinion date. We present to management a few items that they need to review and attest to. They will review this letter and essentially sign at the end that they agree and abide to it and preside that back to us. So this is a draft format, and we just wanted to ensure that you're aware of this sort of communication that the management will have with the firm. And then at this point, I think we can take it out of presentation mode and filter any questions you may have.
Thank you. Board members, any questions? I'm hearing no questions.
I have a comment. I want to thank Valerie, Philip, Rochelle, and the whole team for their professional attitude and the competency in the audit. And we have been 100% transparent. Everything the auditors needed, we have provided on a timely basis. So I just want to highlight that. Thank you.
Yes, thank you so much for your team as well, Hammett.
Thank you, Mr. Patel, and thank you, Ms. Coleman and Mr. King, for the presentation. Our next item on the agenda is the internal auditor's report, and for that, I'm going to call on Ms. Vincent Condra.
Hello, everyone. Welcome. So today I am going to talk about the internal audit updates, where I'll be discussing the current audit status, the FY24 audit plan, and that will be a recap. And we're going to cover some billable project activities and also touch on FY25-26 risk assessment. So in terms of the status of the audits that we're doing, the first one that we have is segregation of duties review. That is in the draft reporting phase. Currently looking to distribute that final report tentatively October 27. This was an unplanned audit requested by the audit committee and by the board. The scope, just a reminder, the scope of that was to assess the effectiveness of MES's current internal controls related to segregation of duties. And the review included an analysis of the agency's policies and procedures, ERP system, which is Workday, and other IT systems. The other audit that that's in process right now is the review of Eastern Shore Forest Products time and material contract. It's in the planning phase. And the scope of this audit is to review Eastern's invoicing process to MES for the period July 1st, 2021 to June 30th, 2023. And this is part of a closeout of the agreement since the agreement ended. I know at the last audit committee in May, we did discuss about the planned audits for FY24. This is just a recap. The first audit that we're going to do for fiscal, the planned audit is review of the management of duplicate invoices within Workday, making sure that the controls in place are working. Yeah, I'm not gonna, would anyone like me to go through all of them or? Reading?
Just briefly describe each of those.
Sure.
Plan items.
So the second one we're going to be looking at is review of procurement shortlist selection process. And these are all requested either from the risk assessment or requested by management. So the third one we're going to do is a review of training application policies and procedures. And the fourth one is review of strategic compensation benefit management. So as from the last time, everyone knows that internal audit has been pulled in to perform several billable projects. And I would like to give an update on our project that we have ongoing is the MDEM COVID closeout project. And this is with our group Technical Environmental Services. And from the period when we started in November 2022 to October 2023, we have worked 927 hours towards this project with the billable revenue of $28,902. We do have an upcoming project, which is with MPA, which is going to begin spring 2024 in terms of ISO, performing ISO 14001 audits. That's all I have. Any questions?
Board members, any questions? Committee members? I don't show any questions. Thank you, Ms. Benson. Our next item is new or old business. Is there any business board members would like to discuss in open session? Hearing none. The next audit committee meeting is Thursday, May 23rd at 9:30 a.m. Since there's no further business, the meeting is adjourned.